Keith Uti, thanks for joining me. Mortgage Alliance, thanks for coming and hanging out, giving us an update on what's going on in the mortgage financing world.
Hey, great to be here, Patrick. It's be a never-ending story right now with changes going on behind the scenes.
So when we consider what's happening, we get an update that OSFI's changing the rules. They're nervous once again. What the heck are we supposed to do as investors? Why do we see this happening? I mean, I have some views of it, but why do you see this happening?
Well, so there's a couple. So one of the things is what they see as an overall high percentage of debt that we have as Canadians. So that's one of them. The other is that they also they're also concerned about the banks overexposing themselves to the amount of debt that investors can and are taking on in a lot of cases. And so that's another piece of that. And then they look at, while people are complaining that they, affordable housing and they can't afford to buy a home and they can't buy a home. Well, so they also are looking to find ways to make it more difficult for people who already own a home to be able to buy more homes, so that maybe those people that don't own can hopefully potentially buy.
Does the government policy, is it a never ending, are you guys crazy thought process that we have to get into with this government? It drives me freaking crazy. I get it's OSFI and I know all that, but when we consider that the other side of that, the unintended consequence of that is that mom and pop investors supply as much as 50% of the rental housing. And we seem to also have a housing crisis that includes rental housing. There's not enough of it to go around, and supply isn't picking up at a pace that's going to accommodate it. So while we're seeming to appease and trying to get this first-time home buyer looked after, the other side of that is the unintended consequences of all this tightening up of lending to investors is going to cause the fallout in terms of rental supply. That's how I view it. And I don't want to go off on too big a tangent, but what's your view of that, Keith?
Yeah, well, I mean, we're seeing it. I mean, we've seen it in Toronto and Vancouver before. We're seeing it now in most places in Alberta. Supply is the issue. And now, tenants are going, why our rents are going up too much? Well, that's because there's a lack of supply. And it's not just that there's a lack of supply of rentals, there's a lack of supply of housing, just in general. If there's a lack of supply of housing, people who could potentially buy can't even buy a house, so they're not moving out of places they're renting to make them available to other people. And then you throw in how many not just provincial intermigration, but you throw in the international migration on top of that, then you're adding that much more demand onto that supply, and it doesn't exist. But then you hear stories like Calgary Housing Company sitting with a whole bunch of vacant units, and nobody really, the government not pushing to dig into, well, why is this, and what can we or should we be doing to be able to make these vacant units that they've got sitting there available to people to be able to have them live. Like, is it the guidelines need to be changed because they haven't been changed in a long enough time to adjust to what affordable housing is in that context? So things like that all come into play in this, but I don't know that the federal government looks that far into it to see it. That's probably more of a provincial and or city thing in the case of the Calgary Housing Company. But these are all things that play a factor that are putting these pressures on, not just in Alberta, but in other cities across the country too.
Well, right across the country. I look at it, and I know we're going off on a tangent, but I think it's important, and I think it's a good message. I don't know if you knew this, like you know this, but I took the time to write a list, and the list covered all of the things that the Bank of Canada and or our governments have put in place over about the past 5-ish years when it comes to trying to temper demand. that's where they're going, right? When we start to see lending policies, but just to kind of go through what I would call the executive summary, that policy measures that have been put into place in, really it's trying to control primarily Vancouver and Toronto as often, but they can't. They're not snipers when it comes to these policies necessarily. So they have implemented foreign buyers tax. They've implemented the mortgage stress test. They implemented BC speculation tax. They implemented empty home tax. They implemented rent controls years ago. And they then raised rates the fastest and the highest, I think, on record. And then now they've added investor financing mortgage qualifications to tighten that up even more. Yet, despite all of those, guess what? Prices continue to rise. So here's the point of all this. They are trying to control demand. And on top of the ridiculousness of trying to control demand while they let 1 million people into our country, and this is a bit of my rant, is they're still not addressing the supply issue. And I don't know if you knew this, and I'll share this in this week's RAIN member meeting, but housing starts are at 231,000, which, by the way, is down from 271,000 in 2001, which is all to say this. They keep trying to beat the demand out of people when they can't, because they're just, people need a place to live. And they're not addressing the supply, although they talk big talk. And did you know, Keith, on this rant, that 30% in Ontario, 30% of the housing production is tax that goes straight to the government. And oh, by the way, that's paid by people buying real estate with after-tax dollars. So this is all to say that housing is an absolute cash cow for our country. And, I just don't see them fixing the supply issue. So that is a backdrop, that long-winded little rant there. That's all.
I agree with you 100%. Yeah, I agree with you 100%. They're not attacking the supply issue. They're trying to tamper demand, trying to make it more difficult to qualify. And the more they seem to try to make it more difficult to qualify, the more the market seems to pivot to make it possible for them to qualify. So now they've reverted. Yeah. Well, now they've reverted. So now they've reverted to attacking directly from the lender's perspective by, I'm going to add one in the last 5 years that you didn't include there, that the amount that lenders can leverage on the unconventional mortgage lending side, they lowered their ratio.
Yes, CMHC changed the rules.
Yeah, right. So they changed that. So when the lenders and the lenders have to take on all the risk on those uninsured, and they lowered their ratio. So what did that do? That bumped the interest rate. Now there's an interest rate premium on uninsured mortgages plus rentals on top of that, because they increased the risk for lenders and how much they can lend per dollar. So there's so many things. And now they're tapping into, they're forcing lenders to change policy on even the number of rentals they can own, or the percentage, or how they do the calculation of rental offsets on properties that are non-subject properties or subject properties in qualifying. They're now, lenders that used to say, well, no matter how many you have, but now we can do 4. Well, we can do 4 for you. Now they say, nope, not anymore. Now you can have a maximum of 10 and we'll only do 4 of those. Or some have gone, nope, you can have 5, you can own 5 rentals and that's it. And things like this. Now, there is some lenders who were more conservative are talking about coming out with policies to be a little more aggressive to counter some of that, but we haven't seen it yet. We don't know exactly what it's going to look like. But we're seeing, B lenders, B lenders and A lenders being forced to pull back on how many rentals they'll allow you to own and stuff in that conventional uninsured space. There's definitely things going on in the background. And the worst part is we're not always hearing and seeing this information up front. Sometimes we're not finding it out until we're submitting a file to a lender based on what we know or what we did know. And then they're telling us, oh, you know what? We actually changed that. And going, what do you, what do you mean you changed that? That wasn't put out there to us.
So the question is this: what as investors are we to do? We still know that ultimately the rental demand is not getting weaker, it's getting stronger. So the demand for rental housing will continue, yet we are being handcuffed to some degree. Now, I know that also historically, the pendulum swings from one extreme to the other, and ultimately this too shall pass. In the meantime, what can investors do to just keep moving and inching forward so they don't get shut down by all of this, Keith?
Well, one, make sure that they have good liquidity showing if they're going to be buying properties. Show good liquidity so that they look like, so they show that they're a lower risk. So that's number one. Liquidity is one. Number two, don't be showing a high reliance on rental income to be able to cover what would be your living expenses. I've had a couple of clients recently where that's been the issue. Their viewpoint of the amount of income they have coming in from the rentals relative to their overall income was seen to be too high at about a 40%, at about a 40 percentile rate. That was seen as too much. They prefer to see that in the 25%, which, otherwise then you've got to move from you can move to A to B. And there's some, but then there's other challenges in the B space that you can run into. But that's, some of the things. And then are we going to see more impact in the near future? Well, potentially. We haven't heard what's coming out of the public consultation that ended April 12th. We haven't heard what that may or may not look like that came out of that. There was four big things that they approached in that. So we'll see if any of those are coming into play, in June, July or not. We haven't heard yet.
So are there any kind of good news looks at what's going on in the world? Have we got some positives to look at? I mean, right now we see it's this kind of weird and wonderful world that the OSFI banks are dealing with. Our government is pushing on. Left hand doesn't seem to know what the right hand is doing. I believe that within all of this chaos, there is got to be some opportunity at some point. But are you seeing some positive changes as we look into the future, Keith?
Yeah. So I just gave you a little hint earlier, but so one of the key lenders is looking at allowing up to 9 properties, which is going to be significant, and potentially also allowing second mortgages and having a net worth lending program that's more flexible. So those are positives that are coming. If you're an investor who's maybe being invested in some properties for a while, maybe now is a good time to exit if you're looking to maybe create that free and clear long-term wealth plan where you own some properties, you sell one or two, take that money and pay off one or two of your other rentals. Now might be a great time to implement that strategy. If you're in Alberta with the openness, with the flexibility on rental rates, now is a good time to be looking at how your strategy of how you're doing your rentals on your properties, how you're doing your leases, what do you have coming up for renewals, how aggressive can you be on a renewal before it really you could lose a good tenant, versus accounting for things like carbon tax increases on utilities and property taxes and being able to at least have those covered off. So these are some of the positives that I would say that we can look at from a market perspective. And you know what? Fixed rates have come down. I mean, compared to where we were just over, about a year ago, fixed rates are down by about 1%. I mean, that's a positive. I mean, we're not that far off of where we typically are. Maybe we're just a hair high to where we typically are on fixed rates in Canada. But I mean, anywhere from a 3.5 to 4.5 is kind of a normal fixed rate for us on a 5-year rate. And we're in that realm on high ratio insured purchases. On rentals, we're a bit higher. But you know what? We've also, as we mentioned, that rule change, if you applied that same rule change back to other years and applied what that premium is that they've put on there, we're not that far out of the realm. So it's there's opportunity. I mean, there's bidding wars of 16, 25 offers on properties in Calgary. I've got clients that are losing out on 3-4 bids.
Yeah, well, we have to consider that the demand remains. Financing is tough, and then on top of it, most major cities in the country, including Calgary, are at least 20-year lows of listings. So it's not like the market is being flooded with even new listings from people selling, because people don't seem to want to sell either. So we really got some headwinds that we have to work through and sort through. And, always at the end of the day, when we look at, as investors, we have to be working with investor-focused team. Mortgage Alliance, you, Keith, UT, are a big part of us as a trusted partner in the real estate investment network, supporting real estate investors. So this is a perfect time to, remind investors to reach out to you, have the conversations. There is a way through it. There is a maze of, it seems, challenges, but more important than ever, I really strongly believe, is owning assets in this current economy, not just nationally, but at a global level, is your hedge against all of the uncertainty and the potential possible black swan events into the future. That's how I look at it, Keith. So I want to say thanks for giving us this update. Anything that you want to add before we sign off?
You know what? If you're an investor, you're confused, you're not sure about what you can or can't qualify to do, or how these changes have impacted you because you haven't bought something in a while. Just a conversation, right? Have a conversation so that you can have an idea of what your plan should be going forward.
Thanks for your time. And Keith, as always, thank you very much.
Hey, you're welcome. Thank you, Patrick.